Welcome back. Continuing with earnings conversations, then we're now being joined by Amit Agarwal, the Executive Director and Group CFO at DCM Shriram, to discuss the road ahead for the company. Amit, good morning. Thank you for joining in. Get it straight off the bat. What are the kind of growth targets that you are penciling for FY26 now, considering the situations that are developing both in the country as well in terms of the economic growth, of course, and the geopolitical tensions overseas when it comes to tariffs and all of that? What are the kind of growth targets for FY26?
Yeah, I think for us, we've completed our capital expenditure programs in chemicals. A large part of it has been completed, which happened in the current financial year, the year gone by. And in this financial year, also, we are completing a couple of projects. So what I feel is that a lot of growth is going to be volume driven. The project which we completed last year will have full year impact this year. Some of the projects which we are completing in early part of this year, they will have an impact this year and next year. Similarly, next year also, early next year, we are completing some projects. So it is a continuous pipeline of volume growth that we're looking at in chemicals, some of it in sugar. Similarly, in our Fenesta and Farm Solutions business, also, we're looking at volume growth. So I think that's the best part, that our growth going forward will be driven by volumes.
And what are the kind of volume growth that you're expecting this year, Amit?
See, I think if you are wanting to understand in terms of revenue, so I feel on a conservative basis, we should see a 10 to 15% revenue growth year on year.
10 to 15%. Similar to last year, you ended FY25 with 11% and FY26 should also be 10 to 15%. Chemicals is about 20% of your top line right now?
Chemicals would be close to about 25% of our top line.
25. And now with the expanded capacity coming on stream, what is the guidance on chemicals revenues and how much will it contribute going forward? And will there be any change to your EBITDA margins in the chemicals business?
Yeah, so I think in the coming year, majority of our growth in bottom line, a large part of it will be driven by chemicals business. They will form a large part of our profitability. And even on the top line, from current about 20-25%, they will be in the range of 25 to 30% in terms of top line.
Okay. And what would the growth be? You're saying the revenue contribution should inch up closer to 25-30%.
Yes.
And what would the revenue growth and even the margin improvement? Because you're saying that will be the dominant driver for your profitability.
See, I think, as I said, for our kind of businesses, what we look at is how we are growing our business in terms of volumes, because that defines the growth. And the other thing is what we are doing on the cost side. So we have been taking cost side initiatives in terms of power plants, in terms of green energy. I think those are things which are in our control, and that helps our margins. Now, specific to your point on margins, last year, full year, we had a margin in chemicals of about 17% at EBITDA level, and Q4 was about 20%. So given, the way industry is, the way we are seeing trade wars and things like that, I don't think it's right to give what the number can be. But best case, we do expect to be operating in that range on higher volumes, which means higher profitability.
So in that case, Amit, what are the kind of margin targets that you are penciling in? Do you expect to remain in this 11 to 13, 14% range for FY26 as well?
I think so. We should be in that range.
All right. And what about the ECH plant, Amit? There have been several delays, right, with regards to the commissioning of the plant. There were supposed to be trials in the fourth quarter as well, and expected to be commissioned in the fourth quarter. Where do we stand on that regard?
I think we have completed almost 99% of the project, right? It is just that some equipment is, having some technical issues. Now, somewhere where we invested almost 4 large projects got implemented in last 2 years, I would say, in terms of commissioning. We can have a problem in one of the projects, which can always happen. But we're looking into it, and I think our trials should start now by this month end, and we should be commissioning in early June.
What's the broader outlook for sugar, ethanol, and even the Fenesta business? What would be the key milestones the company is likely to achieve in these two segments?
See, sugar this season wasn't very good, given the fact that the sugarcane production was low in the country, and therefore production levels came down. Even the recovery levels came down. So I think there is scope. If you say next year, obviously there is scope for increased volumes in sugar as well. But I think what's important in sugar business is or industry, I would say, is for the government to look at a holistic policy for sugarcane cultivation, how it can be improved, and also for a better policy for manufacturers, both for sugar as well as ethanol. Although we feel in this year it should be better, given, I mean, hopefully the overall sugarcane production should increase. Therefore, it should be better off. But then, there are a lot of issues like crop economics, climate challenges, diseases. I think these needs to be looked at more holistically for a long-term stability of sugar business.
What about the margins and the top line growth for the sugar business, Amit? Have you set any targets for that?
The sugar business is very difficult to set targets for the margins. It's so sensitive commodity, both on the feedstock side as well as on the output side. So it's difficult, but we do expect margins to be better.
Do you have any exports?
See, exports is driven by how much government allows. It's purely completely regulated sector, both on the input and output side.
Okay, so what was the export contribution?
Last year, not very significant. I think overall profitability, maybe 5-6 crores would be.
Okay. And is that likely to change this year?
I don't think so because production levels have been low this year. Inventory levels in the industry have been low for sugar. So I do expect some production, but not very significant.
Now tell us more about your recent acquisition, Amit, the DNV Global, the rationale, the opportunity that you're seeing from this acquisition, and how is it likely to contribute to your P&L this year?
So one, I think we are very excited with this acquisition because it's a new area that we've entered into, which is an adjacent to Fenesta, the windows and doors business that we have. Now, currently, the way this business acquisition is being looked at is more in terms of backward integration because it will help us innovate on hardware faster, and it will also help us give better customer experience. So that's the whole objective to start with. Going forward, futuristic, what we look at is this as another vertical or another revenue stream where we get into more innovative hardware and where we sell it as a product, as a revenue stream direct to customers as well. So it's a bit of a long-term story. I think this will shape up over a period of next 2 to 3 years, but we are very excited with this new entry.
But does it start contributing meaningfully this year, or you'd see meaningful contributions only 2 to 3 years down the line?
Meaningful will be 2 to 3 years down the line.
Right. All right, Amit, thank you so much for sparing time and joining us today. Wish you good luck for the rest of the year as well. The management there of DCM Shriram on their quarterly results and the road ahead for their. Take a short break. More on the markets on the other side.